Hey guys, Market Sniper, Crypto Sniper, and the Great Reset Sniper coming back at you. Follow us on Twitter, remember, at the Market Sniper, at the Crypto Sniper, at the Reset Sniper. Looking at Bitcoin and also at gold. So interesting thing about this is that it transcends two markets that have got on the surface nothing to do with each other, but actually have a degree of correlation as we've been experiencing and have been observing and making comments on our recent YouTube about. That is that basically crypto has a lag on gold. In other words, if we're having a fiat system pushback, the central banking cartel trying to keep and maintain some sort of semblance of sanity in their tokens that they've printed up in their binary digit banking cartel based system, what do they tend to do? They like to, if gold's getting too strong, the canary's singing too loud, they like to rein it all back a bit. So they don't like disorderly markets one-sided. By the time it gets disorderly, you know you're in a breakout situation that has gone completely out of control. And loss of control is not something they like. That's why they're called control structures. Anyway, enough of that. So essentially we've had Bitcoin that is very much traced gold in terms of what it's done over the last period. So we were warning that most likely leverage longs were going to get a bit of a washout coming to their way in the not too distant future. However, I didn't call for out and out shorts. We're not interested in trading. I don't consider anything particularly high probability. If I don't have targets, etc., I don't jump in just because I have a feeling on direction. That's the difference between discipline, patience, and real trading. That fact that you can call a market move and you do not feel the obligation to participate in it. No targets, not the clearest structure apart from just looking weak and standing back. If you want to learn that patience and discipline, by the way, start by clicking and getting our mini series in the links below. Book a call and find out more about our community. Everything that's basically transpired, I've discussed and given heads up to my community in great detail on a number of occasions daily through our interactions, both through looms, videos, charts, pictures, and voice messages, and a variety of other things. So it gives you comfort when you get compliance, but you don't have to be in the market all the time. This is one of the big lessons. You really need to, you ideally want to return to a point where actually you're trading fairly little, but those trades are all exceedingly high conviction trades. So your hit rate on them is a lot higher, and you're choosing them because of the great reward they give to a really tight risk. And that makes you far less decisions, higher quality decisions, and much higher reaps in terms of the harvest you gain when you actually put those trades on. That's the big difference. In fact, the activity in between your high conviction trades cost you money. They almost invariably cost you money. And most traders' profits, 80%, between 80%. If you study stats and you know a little bit about trading history, most profits are made probably in the top 4 or 5 trades if someone trades 100 times. In other words, your top 5 to 10% is giving you 80% of what you make. The rest are doing very little added value. And in fact, many of them are big givebacks and often compulsion and money management blowouts when you're intermediate or even a beginner trader. So that's the key thing. So anyway, back to this. If you want to learn more about that, book a call. That's what we're there for. It's on the website, themarketsniper.com. You know what to do. The links are below. Anyway, so let's show you the gold chart as well so that we can just revert back to what's gone on. You can see gold is now rallying, and I will expect that Bitcoin, after moving lower, will also do something similar. These are the exact same time frames. Give or take a little bit of framing on the side here, adjustments along the bottom, etc., etc. You've had your bear flag over here. You broke your grind line over here. In fact, I've done a great chart where I've annotated this. I pushed it out on the Twitter as well, by the way, if you want to have a look at it. So let's have a look at this a little bit bigger. So there's your gold, and these are the steps that have transpired. You can see the grind line break up top here. The softening key event. What do you get? A return move to that grind line. In other words, the bear flag is that revisit to that grind line point or that point of break. I'm more interested by horizontal lines. So you'll see the horizontal blue line, and you can see how you revisited that blue line going in there. So we're up top here. And then you dipped out of your flag. So that's the beginning, the next stage of your spill. You get a little bit of a break in the blue box. So we've had the pink blocks break. I'm looking at the gold above, and I'm going to compare this now to the, let me just get that awful thing, go away now. Yeah. Why don't you go away? I do wish you'd go away. There you go, finally. So the blue box break, you get a little return move to the base of the bear flag and you have your spill. That's the orange spill. Then what do you get? A rising wedge continuation, and then you're getting the secondary spill post your break. You've already had a spill coming into that created your bear flag. That tells you that in the flagging continuation period, you're going to spill to the south side. So the first spill where you get the pink box is affirming the softness, the weakness. The flag is the weak response of the bulls. In other words, a grinding level. The blue box confirms a break of continuation to the downside, small return move. Then you get the orange arrow spill that then leads to the continuation wedge and a secondary spill, but already running out of momentum. Marginally lower low, if you see here. So if I just start drawing on the screen a little bit and go grab a pen, you can see at this juncture this low over there. I've done it in black compared to that low, marginally lower low. So the big spills came in here and then there. This is a third and final spill, and those were your rally legs back. This will probably be possibly a low. You might make a double bottom. You might go one more marginally lower low, but it looks like it probably might start losing some of that downside momentum. Let's bring the Bitcoin into frame because we're talking about gold. If I just squeeze this a little bit and I'll take the top bit right off there, you know kind of what we're getting. So initially the grind line break on the Bitcoin. Let's get right up to there. We need a little bit more of it. You get the grind line break. I'm going to change this from black to red. Coming off more slowly initially here. And then you get your flagging. Your flag got tested, by the way, and it got put straight back in the box. Then you get your blue box break. Note how it's lagged. I haven't done anything. I haven't moved it any. These things are lagging. Your pink box to your pink box, your blue box to your blue box. Then your spill started on gold over here. Your spill started on Bitcoin over here. Continuation pattern. Note how it fits in perfectly on the 9K level. And then boom, you're going down. I'll drop the chart a little lower so that you can see it. So I haven't perfectly nailed the fitment there. But that gives you the narrative, quite similar in nature and structure. So let's just take that off. Down, down, down she goes. Now you're getting a little bit of hammering starting to come in on your Bitcoin, and that's probably going to start reacting to the fact that gold is probably going to start snapping back. So the third and final spill actually just takes you a little bit lower and could be the beginning of some form of rounding bottoming. Very good. Okay, so I hope that's useful. That was your take. I did this a couple of times. Fit to screen. Let's try that. We did this a couple of times on Bitcoin YouTube on this, both on the Crypto Sniper and on the Market Sniper. Follow both because often now they're blurring. You shouldn't think in silos. This is 360-degree analysis where there are correlations between markets. So while I have to, for people's understanding, say, okay, we talk crypto, we talk traditional markets, we talk reset and the economics. The element is all of these overlap, and hence why, you know, our logo are the three circles and we're actually sitting in that middle bit. There's a little bit of everything, and you think you don't need those other bits, you need them all, because that's how you get the understanding and that's how you nail your trade. Anyway, yeah, we'll see you on calls if it's for you. Remember, trading isn't for everybody. It's an emotional journey. It doesn't mean you win every time, but you get better and you can build towards having that lifestyle trader existence. Pop over to the site and book a call to chat further. Other than that, follow on the channel. Please like and share. It supports us in terms of what the work I do. The more I get support there, the more it's growing, the more I will serve the audience. So get people on board if you think it's worthwhile. And other than that, enjoy your weekends and let's see what happens over the weekend. I wouldn't chase in short now, by the way. I'm starting to think now, okay, that's had a good little relieving of the pressure. We'll have to see what happens. Could be a bit of basing, could swing the other way, could base out, could be a little bit more continuation. We don't expertise out on trying to call reversals, remember. But at the same time, selling pressure does dissipate and you can see it and it leaves its footprint. So that's usually a precursor to a pause at minimum or possibly a reversal. Okay, enjoy yourselves. Have a great weekend. I'm the Crypto Sniper and I'm signing off. All the best to you all.